Stop tossing your money under the mattress. While it might seem like a safe place, it's not doing you any favors just sitting there. Inflation will eat away at its value, and you miss out on potential growth opportunities. Instead, let's explore some smart investment options for 2025 that can help your money grow. Here's where you should invest in 2025. The financial landscape is evolving, and there are several promising avenues to consider. From traditional stocks and bonds to real estate and emerging digital assets, the choices are vast and varied. First up, we've got stocks. Stocks represent ownership in a company, and they have historically provided substantial returns over the long term. By purchasing shares, you become a part owner of the company and can benefit from its growth and profits. They're like owning a slice of your favorite company. When the company does well, the value of your shares increases, and you might even receive dividends. However, it's important to remember that stocks can be volatile, and their value can fluctuate based on market conditions. Think of it like buying a piece of that pizza you love. If the pizza shop becomes popular, your slice becomes more valuable. But if the shop faces challenges, the value of your slice might decrease. That's why it's crucial to diversify your investments. Stocks can be awesome, but they can also be risky, so diversify. Next, bonds. Bonds are a more stable investment compared to stocks. They are essentially loans you give to the government or corporations, and in return you receive regular interest payments. Consider them as lending money to the government or a company and getting paid back with interest. Bonds are generally considered safer than stocks, but they also offer lower returns. They can be a good way to balance your portfolio and reduce overall risk. It's like loaning your buddy $1 and getting $1.10 back. Safe and steady. Bonds provide a predictable income stream, making them an attractive option for conservative investors or those nearing retirement. Real estate is another hot option. Investing in property can provide both rental income and potential appreciation in value. Real estate can be a tangible and relatively stable investment, especially in growing markets. Picture buying a house and renting it out. You get rent money every month, and the house might increase in value over time. This dual benefit makes real estate a popular choice for many investors. You get rent money every month, and the house might increase in value over time. However, being a landlord comes with responsibilities. You'll need to manage tenants, handle maintenance, and deal with potential vacancies. Just remember, it's not all sunshine and rainbows. There are maintenance costs too. Repairs, property taxes, and insurance can add up, so it's important to factor these expenses into your investment plan. Don't forget about mutual funds. Mutual funds pool money from many investors to buy a diversified portfolio of stocks, bonds, or other assets. This diversification can help reduce risk and provide more stable returns. They pool money from many investors to buy a mix of stocks, bonds, or other assets. Mutual funds are managed by professional fund managers who make investment decisions on behalf of the investors. It's like joining a financial potluck dinner. Everyone adds something to the table and you get a bit of everything. This can be a great way to gain exposure to a variety of assets without having to pick individual investments yourself. And hey, ever heard of ETFs? Exchange-traded funds are similar to mutual funds but with a twist. They can be bought and sold on the stock exchange just like individual stocks, offering greater flexibility and liquidity. Exchange-traded funds are like mutual funds but can be bought and sold all day like stocks. Super flexible. ETFs often have lower fees compared to mutual funds, making them an attractive option for cost-conscious investors. Lastly, let's talk about the new kid on the block, cryptocurrency. Cryptocurrencies like Bitcoin and Ethereum have gained significant attention in recent years. They offer the potential for high returns but come with high volatility and risk. It's exciting but wild, like roller skating on a bumpy road. The value of cryptocurrencies can swing dramatically in a short period, so it's important to approach this investment with caution. Only invest what you can afford to lose. Cryptocurrencies can be a small part of a diversified portfolio, but they shouldn't be the main focus due to their unpredictable nature. So, there you have it. A variety of investment options to consider for 2025. Each has its own benefits and risks, so it's important to do your research and perhaps consult with a financial advisor to create a strategy that aligns with your goals. Mix and match these options to fit your goals and risk tolerance. Happy investing. Remember, the key to successful investing is diversification, patience, and staying informed. Here's to a prosperous 2025.